Welcome to Real Estate 360 with real estate expert and good guy. And I don't say that about everybody. Kenn Renner, we're back again. Another month, more rising numbers. We've got a lot to go over in the Austin, Central Texas housing market. So what are you seeing? What's going on?
Gosh. Yeah, the numbers keep coming in, right? We talked about this earlier this year. Said in January when we saw the huge influx and people lining up 30, 40 people deep to buy a brand new house. I said, watch what happens to the stats in a few months because it takes a few months for these to catch up. And so we are still even dramatically higher than the last time that we talked about this last month. So from May to May.
And before we get into it, any end in sight? Any
we are
slowdown?
Seeing, I'm seeing on the realtor websites and their Facebook is everybody's like, are you feeling a slowdown? And I would say yes, and that's all relative. It's the theory of relativity.
Right.
Depends on who you are and your perspective, right? So we're down like the last couple listings we've had maybe 6-7 offers on it. A couple months ago, those same listings we get 30-50 offers. So I think there's a little bit of buyer fatigue. Plus we've gone up. The average home has gone up 100,000-120,000 in the last 6 months.
How close are you watching interest rates too?
Well, those are always in play, and they're still being held quite low. So, owner occupants still in that 3.5%, 3.6% range. So it's really still good. And even investor side of things is still at that 4% range and less. So,
so the money's cheap.
Yeah, money's cheap. Rents are going up. Prices are going up faster than rents. So it's a good time to be a landlord.
Yeah.
And that's kind of what I've been doing for all these years, either helping a lot of first-time home buyers into their homes, but we also found out over the years that that'd be a really good investment, which it has been. In fact, I was just talking to a lady down south. Her name's Wendy. She called me. She said, I don't know if you remember me, but it was 1997. You sold me a little house in South Austin, 1,100 square feet. I think she paid $74,000 for it. I looked at the comps and I fell out of my chair. It's going to be over $750,000. And she fell out of her chair and said, I said, I don't know. That's totally different than what I was thinking. I was thinking maybe 4. And I'm going, no, things have changed in the last couple months.
A quick question, having been a landlord to several properties over the years, I've learned to figure in what I call the pain in the butt factor of people. Do you that's something everyone should consider too?
Well, there's the hassle factor. It's not like owning
the hassle factor is better.
And I've never really had major issues, and I've owned over 100 and bought and sold over 100 homes, owned them over the years, and have a portfolio too. And so we've never really seen any major dramatic things about having It's all just like any other investment. It's a small business. So there's income, there's expenses. You can treat it as a hassle factor, or you can hire really good management, as all owners should. Just like the owner of the McDonald's franchise doesn't worry about the day-to-day activities. He's an investor.
Right.
And so we're going to see these numbers, what happened with our investors. And I'm just so glad that my clients join me and follow me on this, being a harbinger of watching cycles and getting in front of it. So I thank you guys that took action. And it's not too late to get in the game, but we really getting very selective on where we're throwing the dart. Should
we jump into the numbers?
Yeah, well, let's go ahead and talk about these numbers because it does make a difference. And we'll talk a little bit about one of the things that brought me here and brought me to California to be the Pied Piper of real estate. So,
when was the last time you were in the Bay Area?
It was in February of last year. And so I've always been really, my dad taught me to follow the cycles because history repeats itself. And so I saw what's happening in the Bay Area. The values were going up 20, 30, 40% a year. And that's not sustainable for too long. So I was saying, I was going to go out there and go, hey guys, Austin offers a great opportunity. You can see that one house that on the graphic, the little 1-story, 3-bedroom, 1-bath house. It's worth $1.4 million.
Yeah.
Okay. That $1.4 million here, in February of last year would have gotten you that one on the right, which is a 4,500 square foot house on the shore of Lake Travis.
Right.
Because we've had a boom in price, especially in the luxury, you can take the lake part out of that. So it's not lakefront anymore for that value.
Having lived on the lake, it's overrated.
Yeah, but
it's a lot of work.
But that house is still, $1.5 million. You get 4,500 square foot. That's custom house. So, and then the really brought me out there is really the possibility of financial freedom for some of our clients. That same little house that you see in the picture, we turned that one house and it did a 1031 tax deferred exchange and turned it into these 9 houses.
Which, by the way, if you don't mind me interjecting here on the podcast, if you're interested in that exchange, we did an entire episode episode about it, and Kenn covers it thoroughly. So I encourage you to go through the catalog of episodes if that's something that would apply to you. A lot of good information.
Yeah, and we've got to watch what's going on with the political realm, and the taxing laws and the estate laws are changing, and all this is very, very important. And timing, you got to have your network of help, your experts that are there to help you with all this. So that's kind of what we put together. And then, as I was driving to that presentation out there in Santa Clara, I was driving down the road and with my Uber driver who was driving a Tesla. So he showed me how fast it could go. It's fast. So, but I got my appointment. But on the way, I took this picture of all these RVs on the street, and I'd read about it. I couldn't really believe it. Those were the cops, the firefighters,
First
the
responders.
teachers. People that people working at the hotels that they couldn't afford to even rent in the Bay Area. So I saw it as a humanitarian deal. I'm like going, oh my gosh, all these guys have to do is drive 2 days to Austin, Texas, and we can get them a house, right? So housing opportunities available for everybody. So looking for helping people find a better way of life, whether it's to take that one house that was getting $3,300 a month income and turning it into $13,000 gross income by 1031ing it here, or just being able to sell a house there and be able to buy a beautiful mansion for their family. That's a no-brainer. In fact, that same picture I was gonna use on a billboard in Southern California, saying this is what gets you 1.4 gets you in Austin. This is what it gets in. But I realized back when the pandemic hit, no one was driving, so there was no use.
Everyone was just staying put.
Yeah, but you could stay put on that house on the right instead of the house on the left. So there is a really good chance of financial freedom in real estate, as we all know. It's just how many people have actually taken the jump. So going into the stats to explain why the return is so incredible, we'll go over the. There's 5 counties in the Austin MSA, which is, and we're going to go over each one of those counties, and they're all attached to each other for obviously, and it's interesting to see the different appreciation levels in the different counties, and there's an opportunity there. So down southeast, the lowest price points that we have are 2 counties called Caldwell County and Bastrop County. They're southeast, more rural. There is the toll roads running right through it. There's little towns of Lockhart and Bastrop and great little areas. These are starting to blow up because they're only 15, 20 minutes to Tesla.
Right.
And it's still affordable. So median price in Caldwell County is $239,000. That's up 27% from last year, which is a great appreciation clip, but you can still get a house for $240,000, a median price house. Bastrop County up 24%, and we're going to probably see those numbers jump pretty fast just because everybody's going to Bastrop because it is so close to Tesla. Great infrastructure, cool out there with the pine trees and everything.
I was just going to say, when you roll into Bastrop from Austin, or from either direction, really, you look around at all the pines and you're like, am I still in Central Texas?
You're in Northern California.
Right. Yeah. That's what it feels like. It's beautiful.
Yeah. So it is absolutely beautiful. And here's the big surprise one. It wasn't a surprise to our people who bought in Caseta Ranch. We have about a dozen buyers that bought in Caseta Ranch in Hays County in Kyle. And so Kyle's up 43% from last year. So the median price in Kyle's $380,000.
Wow.
I mean, in Hays County, Hays, Buda, Kyle, that's just about 20 minutes south of the Austin downtown area. So great area. Now, our Caseta Ranch people bought in January, all that one day when they sold 52 houses in one day, and we got about a dozen of them before they sold out. Those houses, the $240,000 houses that were 1,100 square feet are now going for $389 on the website. And we haven't closed the first one.
Right.
So, I mean, there's well over 120, 130,000 built-in equity. And that defers to another point. We have to be very, very careful that we follow what the builder says when they say it, close on time, even if you have to pay cash for the property, because they're not waiting around. They have 120,000 reasons per house to kick you to the curb. So you follow if you're under contract, don't cause waves, close on time, and everybody wins. So
good point.
I say that because the delays is what the builders are so upset about, and a lot of these folks that are buying using their e-loans or their foreign, out-of-state lenders, causes all kinds of hassles and appraisal issues too. So and we'll talk about appraisals in a second. So take a look at Travis County. The median price $550,000. That's up to 41% from previous year. That's Travis County, which includes most of the city limits of Austin.
It's amazing. It was just a couple of years ago. I remember hearing the average price being $350 or something like that. And I was blown away.
Yeah.
I couldn't believe it.
It's still, I figured when I first started selling in Austin, we were about 1/5 of a Bay Area house. Okay. We're now at about 1/3. So you can buy 3 houses here for the price of one. But so it was 1/5 before. In other words, a $250,000 house is worth over $1 million. Now we're starting to see the catch up. What's interesting about that stat in Travis County is look at the new listings. 0%. 0%. Active listings down 68%. So we're still in a really overheated market. We're just seeing a buyer fatigue. We're not seeing as many offers as we used to. Austin Round Rock MSA, which includes all of 5 counties, is at up 42%. We were joking before the show that there are there's almost 10 times as many listings. There's 10 times as many realtors as there are listings available.
Wow. So 10 realtors per single listing.
Yeah, almost.
Wow.
All right. The winner is where I live, Williamson County. It's a high-tech corridor. Includes Apple and the people that commute it into the domain and what have you. 435,000 is the new norm. That's up 50% from last year. 50%.
Wow.
So just to put that in perspective, 50% appreciation rate is 4% per month.
So you're making 4%.
The value's gone up 4% per month. So when I started seeing people offering 10 and 15% over full price, I was like, "Oh, that's crazy, ludicrous. Why would you want to do that? Does that make sense?" I was wrong, because if you just put out 10% more than asking price and it goes up in 3 months, 12%, you just basically bought a price that's 3 months down the road.
Right.
But so, there is still opportunity, even investing side, but it's a much more difficult. As far as builders are concerned, almost from San Antonio to Waco, they've shut down to investors. But we do still have pockets of new builds that we are selling, and they're in our submarkets. So, but that's an incredible stat. 50%. I don't think I've ever seen that. It's actually, I was just going through those numbers. Not only is it 4% per month, the average appreciation rate over the last 40, 50 years has been about 5%, 6% in the Austin area. That's a good clip. That works great for investors, appreciation. So look at it this way. We've had 10 years of appreciation in 1 year.
Wow.
10 years of appreciation
makes it real.
in 1 year.
Yeah.
So will it continue? It's a whole new norm. Yes, it's going to continue. I think we're going to level out on our pricing. And so I think the time to get it was like the old saying with Wayne Gretzky, was don't go where the puck is, go where it's going, right? And that's what we did. Our investors, thank you very much, that jumped on with us. Those that didn't, still time. You just got to get with us about where to throw the dart to make it the best sweet spot as possible. So our goal in our company with Renner Realty is making dreams come true, or actually having fun making dreams come true
right.
through real estate and home ownership. And so we're not only helping our investors build portfolios of long-term income and passive growth as well as equity growth, but we're helping our relos now. A lot of people getting out of the Bay Area, getting out of these areas that are so unaffordable, and it's still actually they have a shortage of homes out there too. As people are starting to move up from their $900,000 one-bedroom condos to their $1.5 million three-bedroom, one-bath, 1,100 square foot house. Or they can come out here. It's no new, it's not new news, and that's what happened. Everybody got in their cars and started driving out here, and so us landlords are doing great. There's bidding wars on rents. And it's still a good opportunity to get in and buy we just sold an $800,000 duplex. Kids are going to live on one side, rent out the other side. There's still good possibilities here, and it's still perspective from the Bay Area is like, this stuff is cheap. Look at the house I can get.
Right.
And so, and us locals are going, wait a minute, you're driving our prices up too far. And that gives me to the last thing, is the financial freedom we've been able to provide some of our clients. We've seen one house that we sold on Links Lane in Round Rock. I was pricing it out 8 months ago at $399,000, and they were static about that price. We just sold it for nearly $600,000. and they're going to retire with $300,000 more than they were going to have just 6 months ago. So it's a windfall. I'm so glad to be able to help the people that have bought homes 10, 15 years ago. They're cashing out and taking their money, a lot of it tax-free, and moving to anywhere they want. In fact, we had one guy, one of our clients, he's going to live in Airbnbs on the East Coast and work from his laptop anywhere. He'd go up and down the coast looking for his next place to live. He's got his $400,000 tax-free in his pocket, and he's sitting pretty.
Good for him.
So making dreams come true, having fun making dreams come true through real estate and home ownership. That's us.
Ken, always good seeing you. Take care
Sandy.
and have a safe summer.
Hey, next time maybe you could talk a little bit.
You're the expert. I'm just driving the bus, man.
All right, yeah,
I'm
get a
just
hold of
driving
me,
the bus.
512-423-5626. Thanks, Sandy.